Good evening, everyone. Hope you've hope you've enjoyed the forum so far this year, and we're now finally at the last session for the year. We'll just give it about 10-15 seconds for more attendees to stream in. And as they do, I will briefly share my screen and go over the usual rules for the session. So just a reminder that the Smartkarma Weekly Forum is strictly for our subscribers. It's purely for informational purposes and not investment advice. The opinion is not of Smartkarma, but rather that of our insight providers. And of course, a Chatham House rule applies to this session as well as all other Smartkarma sessions. So please do not share on social media or otherwise without express permission. In today's forum, we're going to be looking at three ideas. The first one would be an Indonesian healthcare gem, which is called Prodia. Then we'll move focus and look at a deep value commodities stock listed in Hong Kong called Shougang Fushan. And lastly, we will look at Indonesia's non-bank financial companies, which we think could be multi-baggers in the making. So without further ado, let's get into it. So Prodia is a company that listed in Indonesia about 4 years ago. It's a stock that was covered extensively during the IPO process. And interestingly, at that time, it was a stock that did not find a lot of favor with the analysts that were on the platform because of the valuations and some regulatory risks around it. But over the last year and a half, some of our analysts who are on the ground in Indonesia have started talking quite positively about it. And the thesis around Prodia is shaping up very, very nicely. This is a small cap company, as the slide suggests, with a market cap of just about $250 million US dollars. And this is the type of idea that we think would heavily appeal to private equity firms that tend to invest heavily in markets like Indonesia and take large controlling minority stakes in such companies. Let's look at this company a bit more closely. So Prodia is Indonesia's largest diagnostics chain. So this is where you typically go to get a blood test, to get a test for diabetes, and even sort of very, very highly specialized and esoteric tests. It has 39 to 40% market share. And I think this year, the smaller chains have struggled. So Prodia's market share would have probably increased further. Interestingly, Prodia is the only company in Indonesia amongst the diagnostic space to have accreditation with the College of American Pathologists. This is a tough to get accreditation. And of course, it's a testament to the standards that they observe. They have about 270 outlets across 127 cities. As we all know, Indonesia is very fragmented. It's hard to build good distribution, and Prodia has sort of done that. They had a tough second quarter, like pretty much any business or every business in Indonesia, when a lot of the chains were shut down, people were locked down. But the third quarter has been terrific for them, with revenues picking up over 100% quarter on quarter. They're also positioning themselves as a late cycle COVID play. And what I mean by that is, we saw in the early days of COVID, it was the glove makers and the mask makers that did well. But late cycle COVID plays would be companies that actually get involved in the distribution of the vaccine. And Prodia could be one of them. Of course, where this fits into a strong thematic is that Indonesia, of course, is one of the most populous emerging markets. There is an increasing focus on health. We all know that medicine today has evolved to an extent where before doctors prescribe surgery or medicine, they like to do testing. And this is the largest testing and diagnostics facility. Also, what's quite interesting is just how cheap the stock is. So this is on about 15 times PE ratio and 6 times EV/EBITDA. If you look at similar companies that are listed in India or China, you would be paying about 3 times this valuation. Also, as the chart on that right-hand side shows, this has been a very, very consistent company. You've seen, the green line is revenues. They've grown very consistently over the last 6 years. The pink bars are profits. So profits have continued to increase, but more importantly, margins have continued to expand. So that's Prodia. Before we move on, I quickly want to sort of take you to the platform where you can see this particular insight from Angus. Um, Angus, as I was describing, is based in Indonesia. He actually used to head up sales for Merrill Lynch in Jakarta. And over the last few years, he's become an independent research analyst. It's great to have boots on the ground when it comes to markets like Indonesia, where, you know, it's important to see and feel and test what's going on the ground before, you know, just believing what you read on a piece of paper. So, you know, this was his last insight on the 4th of December, where he spoke about, you know, the rapidly improving picture for Prodia. I would sort of strongly recommend you go and take a look and go through it. I think the other thing that's great is here on the right hand side of the platform, you see an insight stream. This is, we call this a stream because this shows you how this idea has progressed over time. So, you know, in October, for instance, Angus wrote an update on this company just as it had reported third quarter numbers and shown a big turnaround. And this is a very important way in which you can follow the progression of the idea, and it also helps keep analysts on Smartkarma accountable to, you know, the calls they're making and the insights they're writing. Finally, if you look at this little analytics piece and expand it, you can very quickly go through the financials of the company, and, you know, that's important. So this was the chart that was there in the presentation, and you can look at it at a long term and just see how consistent the business has been. If I look at the quarterly performance, this was the big Q2 dip that we saw. And, you know, the company has come out very, very strongly out of that in Q3. So there's clearly pent up demand because the numbers have rebounded. Also, I think for such a business, it's very important to see whether it's geared or not. So you can quickly move into some of these other things. So if I go to liquidity ratios, for instance, this line, net debt to equity, is a negative number, which tells you this is a net cash balance sheet, which means, you know, they're not really reliant on external funding to grow from here. They've got a nice buffer. This is valuation. You know, again, if I look at this on an annual basis and go back, you know, valuations have come down a lot. This used to be a 20 times EV/EBITDA stock. And as I was mentioning, now it's on 6 times. So that's Prodia. Let's, I can take a few questions here if you have any, or we can take them at the end. If you want to ask questions, you can either raise your hand or use the Q&A tab, or even send me a chat. I'm very happy to let the attendees actually speak and share their question if they would like. I'm going to keep going, but you know, I'll take questions at any time, as I mentioned. Okay. So the second idea today is a Chinese coking coal company called Shougang Fushan that's actually listed on the Hong Kong stock market. This is quite a it's rare that we talk about a cyclical or commodities stock on the forum, but we thought this deserves a special mention. Not only does it fit a deeply discounted value story, but there is a special situation around it. There is a geopolitical theme around it. And also, I guess it comes at a time when global holdings in commodities are very, very low, and people are starting to reevaluate those, you know, those positions or lack thereof, and consider owning more in the commodity space. The insight provider who covers this stock on the platform is Samir Taneja. Samir used to be on the buy side. He was a fund manager, and now he runs an independent research firm in Singapore called Investix Research. And he looks at some of these interesting commodity names, as well as you know, names that have catalysts on the horizon. So let's look at the key points here. First of all, nearly half the market cap of Fushan, so about 96 cents, is cash. And actually, the share price has come down a little bit. I think it's at around 187 or something. So, you know, that's almost 50% of the market cap. It generates a free cash flow yield of 12% and a dividend yield of about 9-ish%. What's also quite interesting, as you see on the right-hand side, is that coking coal prices, which is what this company produces, are starting to go up. It's extremely cheap. It's on about 2 times EBITDA and 2 times PE. Now, I mentioned there's an interesting geopolitical theme brewing. Over the last couple of months, pretty much since October, China has stopped the import of coal from Australia. And this coal supply is now being diverted to other countries. And this is happening because of certain remarks that were made in public forums that, you know, did not go so well, did not go down so well in China. So as a result, there's a very interesting dynamic that's at play. Coking coal prices and coal prices in China are going up because there's a supply squeeze, whereas prices elsewhere in the region are starting to fall because there's excess supply from Australia that's being diverted. So Fushan is a domestic producer in China and is benefiting from, you know, these prices going up. Now, and I had also mentioned there's a special situation around it. So because the company is so cheap and because it has so much cash on its balance sheet, they had started doing a partial buyback offer, which I think was concluded in September, but they bought back 250 million shares, which is about 5% of total shares outstanding, at a share price of $2 a share. So today the share price is actually below the price where the company just bought 5% of it back. And if we look at the work that Samir has done on the platform, you'll notice that, you know, he very conservatively comes to a sort of a normalized value of close to $3, $2.95 a share, which includes about $1 in cash, $1 in cash and about $2 for the production business. So deep value, special sit, fits into a thematic and an underlying price that's going up at a time when people don't own enough in commodities. So that's why, you know, Shougang makes its way to the forum today. I just want to see someone send me a message. Okay. I've got a question that's come in on Prodia. Maybe I'll wait till the end and get to it. Similarly, if you have questions on Fushan as well, please feel free to send them and I will get to it after the last idea. Okay, so the third name today is called BFI Finance, and the ticker is BFINIJ. This is a, you know, close to $500 million market cap company listed in Indonesia. And it is a NBFC. So what is an NBFC? For those of you who might not be familiar, this stands for a non-bank financial company. So this is a company that operates in the financial services space, but is not a bank. It does not take deposits. And we think NBFCs as a whole in Indonesia and BFI quite specifically could be a multi-bagger. You know, and we'll take a closer look at why. So what does this company do? They're basically a lender. They lend money for the purchase of cars, whether it's new or old, as well as motorcycles. They do that through a network of dealerships and partners. They're a very, very efficiently run company. They have the second highest return on assets amongst all the 107 banks and finance companies in Indonesia. Interestingly, their return on assets is 8.6 times higher than the industry average. I mean, I'll repeat that. This is 8.6 times better than the industry average. Yet, 2 or even less than 2 analysts actually cover the stock. And I think what makes this really, really interesting and compelling is that this company makes 20% ROE. So what that means is every year they'll make 20% profit on their entire book of loans that they make. They make 8% ROA, and yet the stock is on less than 1 times book value. And I'll show you some comparisons. So if I were to compare this to Bank BCA, which is one of the largest banks, actually it is the largest bank in Indonesia, BCA makes less ROE, so it's 17% ROE, less ROA, 3%, but it's on 5 times price to book. So it's 5 times the valuation. Then if I look at a peer of sorts in India, which is Bajaj Finance makes the same ROE, 20%, a lot less in ROA, 3%, but it's on 9 times price to book. So it shows you the value, yet quality that's available through BFI Finance. And the chart on the right-hand side just shows you the relative performance of Bajaj Finance, which is the line that has gone all the way up, and the turquoise blue line, which is BFI, which has stagnated. So this is about 700% difference in performance over the last year and a half. Whereas till about 2018, 2019, these stocks very much moved in line. So BFI has a lot of catching up to do relative to its regional peers, not in terms of performance, but in terms of valuation. And I think when it comes to stocks like this, discovery makes a big difference. So as I mentioned, less than 2 analysts cover it. It's a $500 million market cap stock. It trades about $1 million a day. That might not be good enough for a lot of international large funds investing in Indo. But as soon as this company hits about $1 billion in market cap and about $2 million a day in trading volume, you suddenly have a surge in interest from a lot of funds who previously were not allowed to look at it because it was a bit small relative to the mandate they had, but now they can. And I think that then leads to a real re-rating. So what I'm trying to say here is that if this stock goes up about 100%, so if this doubles, then the chance of it tripling from there is a lot higher. And that's the reflexivity of some of these stocks and markets that makes it very, very interesting to look at some of these differentiated names. So with that, it's the end of today's presentation, and I'm happy to take questions. And, I guess you guys can sort of even speak in the forum if you'd like. So first question is on Prodia, and it's about IDR risks. Are you getting exposed to the risk of a weakening rupiah? And also, what is the background of promoters and their current holdings and so forth? So maybe I'll talk about the IDR risk. So, if you look at what's happening, and in fact, maybe let's look at the platform to answer some of these things. So first of all, let's look at what the US dollar is doing, right? Because at the end of the day, Indonesian rupiah or any other emerging market, you look at it relative to the US dollar. So and let's maybe look at it over the last 5 years. So the US dollar has actually weakened significantly. The dollar index was at about 100 and it's fallen to below 90. What that means is that emerging market currencies are actually doing very well relative to the dollar. Now, of course, this can reverse, but emerging markets have been out of favor for about 10, 12 years, pretty much since GFC in 2008. So I think if one has to look at structural and cyclical risk here, emerging markets are coming back into fashion. And as such, in fact, IDR risk is probably in your favor if you take that view. However, the company itself on its OPEX doesn't really have much currency risk. So you're looking at a domestic consumption proxy. So if you're positive on Indonesia, if you're positive on emerging markets, then you're actually quite well off owning this. I think secondly, there was a question on the promoters, who they are. So I think to answer this question, again, let's go and read some of the pieces that Angus wrote on this. Perhaps we can look at his October piece. Okay, so you can see, this is the management team. And I think one thing that really jumps up is that they're all highly experienced in this particular field. This is the only business that this management team is involved in. and they are heavily incentivized in the business as well. I do not remember the exact holding of the key shareholders, but what we can do on the platform right now is, maybe ask a discussion. So let's post that. Angus, quick question. Could you share with us the background of management as well as their shareholding in the company? I think this is one of the joys of being in Smartkarma, where we can, really sort of engage our analysts and ask them these questions. So this is, we're going to wait for a little while, of course, and Angus will receive a notification on his app, and he will answer this question. And if you guys follow Prodia, you will get an alert. I think your second question that I've received is on BFI, which is why is the PE so high? Actually, you don't really look at banking stocks on a PE basis, because I think it's really not the way to look at these things, because banks, for instance, are very highly levered. NBFCs can be equally or even higher levered. I think a much better way to evaluate banks and non-bank financial companies is to look at their price to book relative to the return on equity and return on assets. So I would not look at PE there. I'm not disregarding it, but I think the leverage levels and how the regulator regulates their operations can determine what PE ratios look at for these companies. Okay, I have another question. This is on Fushan. Okay, the question is, I like the idea on Fushan, but what do you think is holding back the stock from re-rating higher, given the tailwinds, cash backing, coking coal price, etc.? Is there a risk Australia-China troubles resolve and this gets stranded? Great question there. I think the biggest reason that Fushan is lagging is because literally the entire China coal space is lagging. I think there are a few reasons. One is a lot of investors have shunned owning commodity names, especially coal names and energy names, because of ESG concerns. And there is less appetite than there used to be in the past for some of these names because of this reason. Some endowments have altogether stopped owning some of these types of names. So that's one reason. I think the second reason is declining coverage. There was a time, I recall 8-10 years ago, when you would have 10-15 analysts covering these stocks, and now that's completely declined also. So those are two reasons. The third is, a few years ago, there was a lot of excitement that Fushan will acquire more mines and grow through acquisition of more mines, but the management hasn't really focused on that in the recent years. Instead, they are trying to increase the volume production from the current mines. And there's decent upside there, although Samir does not have that in his numbers. So I think it's, what we are seeing with Fushan in terms of interest is very similar to what we're seeing with Shenhua or China coal or even Indonesian coals up until about 2 months ago. So Indonesian coals have really started moving. The Indonesian coal credit has really started moving. And I think the bet here is that value and the company's financial position outweighs some of these investors not looking at coal stocks. Now, on the question of Australia, China troubles resolving and so on, yes, that's very much possible. But I think you still have enormous margin of safety. The numbers that are there to get to the 2 times EBITDA and 2 times PE were done before the recent surge in coking coal prices. So it's quite a bit of upside still. But yeah, from a sentiment-based perspective, yes, if there's a quick resolution, perhaps it will get stranded. Okay. Okay. I've got another question on why BFIN was picked over ADMF. Okay, this is, we pick ideas using a very sort of objective criteria. It's not ideas we choose at random, but it's based on consumption analytics on the platform and what our analysts are actually writing about actively. I think one of the reasons here potentially is that BFIN is probably a slightly higher market cap, and probably more liquid. But we can take a quick look at that together. Okay. By the way, the point that was being made earlier was that the NBFCs in Indonesia as a whole are a very good space to look at. And the reason is, if you look at the playbook in India, in the last bull market in India, it was the non-bank financial companies that really led the market. And I think a similar case can be made for Indonesia this time around. Yeah, so if you look at the liquidity, I mean, this is much less liquid compared to BFIN. So the potential for international investors to get involved and re-rate the multiple is a lot lower. I think this is potentially the reason. But as I mentioned, we look at what's on the platform and what's trending and is being read to focus on it. And the same analysts have not picked up on ADMF as much, but it's a question that you can certainly ask analysts, and we can. Okay, I've got another question on Shougang. Just bear with me. Okay. Any insights into Shougang shareholders, given most large channel coal companies are state-backed, but the biggest shareholder is listed at Sino Insurance? This is a very, very good question. In fact, historically, one of the problems with Fushan was its shareholding, which was private. And in fact, now the new shareholders, there was a big restructuring, new shareholders came in, the old shareholders sold out. And I think that has actually cleared the picture. So Samir talks about it in quite a lot of detail in his piece on the 8th of October, where it was sort of an initiation piece, and I would direct you to that. And I think this is the section. Okay. So in 2008, these 3 coal mines were purchased from a private company, which was run by Mr. Shing and Chairman Wong. There was a reverse merger. I think I'm not going to go through all the detail here yet, but I think you can see how the entry of Shougang Group and Fundi Sino Life has sort of cleared some of that up. Okay, I have another question. Okay, does Prodia just collect samples and send them to a lab and then report results back to patients, i.e. a direct to consumer play? Or does it also have its own central lab capabilities as well as patient facing outlets? So it's the latter. And I think that's what makes it really interesting, because it runs the labs where tests are done. And in fact, it gets 3 or 4 different types of customers coming in. So you have customers that come as a result of referrals from hospitals. They send patients to Prodia for doing the diagnostic tests. So that's one. Then you have customers that come directly, walk-in customers. You also have customers who come through corporate plans that exist with Prodia. And then there is a fourth channel, which is there is a national healthcare system in Indonesia where public hospitals also send patients. And Prodia obviously, does testing for all of them. So this is a very common business that's found in emerging markets. It tends to be a very good consumption story with very stable margin profiles, which makes it very attractive for private equity style investors in markets like Indonesia, because you get very secure consumption style multiples, and there's a very large addressable market and long runway for growth. And as I mentioned, Prodia has displayed that over the last 4 or 5 years of listing, that consistency, and also its ability to continue to handle regulatory change, ups and downs like COVID and so forth. So I think this is quite an interesting play from those angles. Cool. I think with that, let's wrap up on the Q&A. So just a little reminder again, this is very much Chatham House rules and it's subscribers only. I really enjoy when you guys ask us questions, and you can participate as much as you want through these forums. We will be taking a break over Christmas now. So today is the last session for the year, and we will be joining again on the 7th of January with more ideas. Also, please remember, our ideas are going to be, large companies, small companies, thematics. Just in the last few weeks, we have looked at Japanese autos, we have looked at Nintendo, we have looked at a crypto company in Hong Kong, we have looked at a hidden asset company in Singapore. So the idea is to bring together an eclectic mix of interesting ideas and thematics, and showcase the richness of the platform. But thank you very much for your questions today. Oh, I've got a request. Can we look at recent IPOs? Yes, we certainly can. We wanted to talk about Airbnb, but it sort of got crowded out. But yes, thank you very much for that request. We will definitely do that. And we especially like IPOs where the street is missing certain things, whether positive or negative. And certainly this is not just about buy ideas. I think the forum will also actively feature things that we dislike. And maybe we will start 2021 with some of those. But with that, just wishing everyone Merry Christmas, Happy Holidays, and all the best for the next year. Thank you. Bye-bye.